Apple is the new market analysis. Apple shares in recent years have had impressive and steady growth over time. Just think that in 2003 the value of a single share was about $1. If we had bought Apple shares at that time with an investment of €5,000, today we will have almost €1,000,000. Really impressive numbers if we think only of the initial investment of €5,000. Rather than thinking about Apple shares, we should think about the Apple product. Now we don't know if you own an iPhone or at least an Apple product, but we can assure you that once you have tried one of their devices, it will be almost impossible to go back. Apple is sticky, as even the big investor and shareholder Warren Buffett put it. Here are his words: once you use the Apple ecosystem, you're very stuck, at least psychologically and mentally, to the product you're using. The iPhone is a very sticky product. There is also to take into account the consumer franchise that this company has, thanks above all to its strong ecosystem. This is demonstrated by the queues of hours or days waiting for the opening of Apple stores to buy its new products. In addition, Apple in recent years has always grown by increasing its profits and showing no signs of sagging. In general terms, Apple stands out for its excellent financial health and enjoys a very strong investment capacity, which is promising for its future and for its ability to innovate more and more to maintain an interesting positioning. From a historical point of view, the Apple Group has always published results beyond expectations, which proves to be extremely reassuring for investors. Last but not least, Apple as a company has an impressive markup on products sold. More precisely, Apple counts among the companies that have margin levels among the highest in the rating thanks to a type of activity that is known to be very profitable and an excellent mastery of production costs. It is no coincidence that for several years Apple has been distributing very high dividends to its shareholders, who are also in continuous and constant growth. Apple is one of the most innovative and healthy companies that can be found in the stock market. If you think that the sale of smartphones is their only income, you are mistaken. In fact, only 55% of its turnover comes from the sale of smartphones, the rest comes from 1. Music media, iPod and iPad, and related accessories. 2. MacBook and iMac computers. 3. Peripheral equipment such as screens, storage systems, printers, cameras, memory cards or servers. 4. Apple Music, Apple TV and Apple Store, where on the latter Apple receives a commission of 30% for each purchase in the app and 15% for recurring payments. This is one of the fastest growing services. Apple's stock has recently hit its all-time highs as the market capitalization approaches $3 trillion, but above all, because the main benchmark indices from the beginning of the year to date are recording a loss of more than 10%. A general reversal of the prices of most American shares. Most investors do not buy Apple for dividend, however, it yields 0.5% and the dividend has been increased for each of the last 9 years. In addition, the payout ratio is only 15%, so the dividend is extraordinarily safe. This, however, is not all. Apple also returns capital to shareholders through share buybacks. Share buybacks occur when a company buys its shares on the open market, thereby reducing the number of shares available. This means that each action is worth a larger slice of the cake. In fiscal 2021 alone, Apple bought back more than $85.5 billion of its shares, or nearly 3% of its total market capitalization. Apple had an excellent fiscal year in 2021, with revenues up 33% to $365 billion. In addition, investors expect the release of Apple's augmented reality AR and virtual reality VR glasses, which are said to hit the market in 2022. This could create a generous new revenue stream for this behemoth. Financial data. Over the past 5 years, Apple has increased its revenue from $229.23 billion in 2017 to $365.82 billion in 2021. Up by about 60%. Net income increased from $48.35 billion in 2017 to $94.68 billion in 2021. Growing by almost 100%. Apple shares are currently 12.52% below its all-time highs with a PE of 28.36. I hope you liked the video. In that case, I invite you to subscribe and put a like to support the channel. Thanks.